That brings us to theme number 4, which is inflation. Let's roll through that, and then we'll get to some stock ideas from John and JC and on how to find companies with pricing power in inflationary environments.
Okay, well, I've shown a history for Canada and the US back to 1915. And you can see there's a couple of serious periods of inflation around wartime, World War One, World War II, and then the Korean War. That both of those inflations helped reduce the government debt burden. We then had a big surge in inflation during that deglobalization period I highlighted with the Cold War and the commodity price shocks. But the right-hand side red box, you had monetary and fiscal policy running at full speed ahead with a lot of inflationary bias in the settings of monetary policy in the late 60s and 1970s. And you had the commodity price shocks. We've never been experienced to them. OPEC caused a big jump in oil prices, but we did see a broad range of commodity price increases, and that ended up fueling a significant increase in inflation. And that period's pretty similar to what we're dealing with now, where because of the two crises in a row, the global financial crisis and then COVID, monetary policy through the setting of interest rates remained pretty geared towards overstimulating the economy because rates went up and they barely got above 2% in the US. And then once COVID hit, we had massive government spending and government programs to stabilize the economy. And now we have these huge supply disruptions that are boosting prices. And now we have the highest inflation we've seen in many years. And all of us who try to do forecasts are looking at that and grappling with how much of it is the supply side and will it go away soon enough, or is the demand side too hot and we need to lean against that? But certainly the inflation we're seeing now is starting to work its magic and starting to chip away at some of that debt burden. And if it were to stick around for a couple of years, it would work much more magic. But the truth of the matter is, both for the time being, and I think as we look out over the next year, the Federal Reserve, the Bank of Canada, and other central banks are going to be leaning against inflation, which means interest rates are going to be going up. And that's going to generate some shorter term some risks for the economy and for investors. But the fact of the matter is that my final point here is that we're in an environment that's more conducive to inflation. The deglobalization thing is helping by boosting cost structures. The shortage of workers is going to boost wages. We're in the most conducive environment for higher inflation, sustained higher inflation, than at any time in the last 35 years.
Yeah, JJ, I think the important thing to really note here is that as inflation is rising and we go through this government repression to try to diminish the real value of that debt, real interest rates are going to remain very low and potentially actually negative.
Now, two words you often repeat: pricing power, pricing power, pricing power. So in this inflationary environment, you want to find companies that can pretty easily pass on higher prices to the consumer. So let's roll through some companies here. McDonald's, number one.
Yeah, I think that's right. I mean, when you think about it, if the price of beef goes up, McDonald's is just going to pass on that price increase right to the end consumer. And the other important aspect of McDonald's is that because it's got this huge brand awareness. When you go to McDonald's, it's not because you make a date to go to McDonald's, it's because it has this amazing network of locations. And I think it's 85% of all people that go to McDonald's go there out of necessity. They're on the highway or they're walking along the street and they want to go grab a burger or they need some fries. And very small increases in the price of that hamburger translate into major components. So we really look at pricing power, brand awareness, convenience factors, and McDonald's really ticks off all those boxes.
And then JC, you want to pick up on Home Depot?
Yeah, Home Depot's been a huge success story through the pandemic. That's partly because they serve sort of two primary markets. They've got the DIY consumer, and they really flourished during the pandemic because everyone got stuck at home. The housing market was really hot, and so people were either trying to fix up their home office or they're trying to fix up their house so that they could sell and buy a new one in the suburbs. And so that's been a boon for them through the pandemic, and I think it's probably going to subside. I think it's going to be strong going forward, but it'll subside a little bit. But as we start to move into a a more open economy post-COVID, I think we're going to see a lot more of the pro customers come in. And they're the ones who are spending on bigger ticket items. They're spending more frequently. So I think that's going to be a huge revenue driver for years to come. And if you just look at housing starts in the US, we're still well above pre-pandemic levels. And so that's sort of a precursor for demand for sort of these home improvement products, building equipment. And the other important thing is because these are important inputs in our everyday lives. Home Depot has been really good at being able to just push that cost inflation over to the consumer, whether it's lumber prices or steel, that just gets pushed right through. And so that's a really good business to own in terms of being able to sort of insulate your portfolio from inflation.
Yeah, it's really interesting. Everybody was talking about lumber prices last year and steel prices, and it's interesting. These companies are kind of sneaky at times. That inflationary impulse, all of a sudden, lumber prices went to $1,200 per thousand board feet. They're down to about $600 per thousand board feet. But lumber prices at the Home Depot store are still really pretty high. So, these companies are very sophisticated in being able to manage their supply chain and their pricing power. And when you have a housing boom going on, it's pretty easy to say, well, that's what the cost of lumber is. And it just kind of works its way through the system, which is going back to JJ's point, is we need to be careful about having this become too entrenched in the system and not actually retarding it. But these companies, in their own right, are very capable of maintaining that purchasing power because they're almost essential services.
And then with Brookfield infrastructure, you like this and you own this because it's defensive, it has recurring revenue, its pricing power lies in, I guess, it's real estate. It's able to raise rates. Take that further.
Yeah, in many cases. So Brookfield owns infrastructure projects all around the world. And in some cases, they actually have in their contracts price escalation contracts to be able to pass on price increases. They have they have this incredible ability to say, if you're operating a port and there's increased labor costs, for example, well, that's just what it costs to land at our port, and they pass in the price increases. So I think Brookfield's one of those companies that really is offering these incredibly essential services. You need to use them. So if their costs go up, they certainly are able to pass on those price increases to their users.
And JC, is FedEx is in a similar position in a completely different kind of business, obviously, but they can pretty well easily pass along higher prices, and they have pricing power too?
Yeah, that's right. You see crazy demand for these guys through the pandemic. Their trucks are everywhere. And there's very few companies anywhere in the world that can do what they can do. And they've invested tremendously in their network over the last 2 years. But really, this has been a multi-decades process, and it's going to be really, really difficult to uproot that. And Amazon's trying, but they're not going to get that overnight or even in the next 5 years. So, e-commerce is growing. Sending things cross border isn't going to go away. So you're going to need to use these services, and it's going to cost what it's going to cost.